Hey YouTube, it's Any, aka the Not Trader, your friendly neighborhood swing trader, back again with another video. Um, this week I want to go through my pick of the week again. I took a hiatus last week, just mainly because I didn't plan myself well enough. I'm going to try and be consistent with my pick of the weeks and try and keep it every week. The week before, my pick of the week was ABF, but I wasn't sure which direction I was going to go. I initially I put it as my pick of the week, but I wasn't sure which direction I was going to go. So, but it looks like it's been a shorting opportunity from all intents and purposes. And before I go into my pick of the week, I want to kind of go through what I see the market doing in general at the moment, because I've realized that whenever I've given myself pick of the weeks each week, even when I haven't seen particular opportunities, I feel obliged to give a pick of the week, and I'm doing you guys a disservice by picking stocks if I'm not 100% certain, well, not 100%, but pretty certain on how it's going to go. So rather, this week I want to take a different approach, and rather than picking one specific stock, I want to show you a variety of stocks that I'm looking at and tell you about how the market is going in general and what my thought process is as to how I'm going to trade. As you can see here already, I'm in another trade, Cambrex. I took this trade midweek. I'll just go through that really quickly before I go through some other trades. This trade, if you guys have watched my trading 101 video, you probably recognize this trade. This trade is the one that I use as my example for my swing trading, of what swing trading is. If you want to watch my trading 101 video, I've put a card here so you can access it. It's just a very rudimentary, fundamental video on what trading is. And you can see that I was earmarking this stock for quite a while, but then I actually pulled the trigger a couple days ago. Before I even get into this stock, like, subscribe, share, all that type of stuff. I've got Twitter, I've got Instagram, and I've got Facebook. Still trying to grow my viewership, my following on all these platforms, so it'd be great if you guys could go over to those platforms and follow at the Not Trader on all of these pages. Anyway, back to my technical analysis. So, for CBM, what really strikes my fancy about this stock was that it was following an ascending channel pattern for all up until from about, it's been following this pattern for quite a while, so since about 2016. It's been ebbing and flowing across this resistance and support. Now when it hit the support at around November 2018, so a couple of months ago, it was fluctuating here, and you know from all the weeks that I've been speaking about my strategy, I like for it to break out of the 15-day simple moving average, which is this purple line, and then consolidate if I'm going to buy it. So here I was expecting it to break out, consolidate, use the 15-day simple moving average as a support, and then carry on going up. It did not do that. The 15-day simple moving average maintained its position as a resistance, and then the stock started falling. So then it created a new pattern, and that's why I plotted these two blue dotted lines. They're parallel as well, and it's shown that this pattern had been forming for quite a while once you saw these different points. So every time it hit the resistance here on this blue line, it fell for a bit, came here, fell, came here, fell, came here, fell. So when it fell down to here and this support, and then it came back up, I saw opportunity to short here. But I did not take this trade, as I said in my Trading 101 video. I did not take this trade primarily because I was already in another trade. That was the only reason. But as you can see here, this was a great opportunity because within 1, 2, 3, 4 days, this stock had dropped. Let me use the ruler tool. This stock had dropped 600 pips, 650 pips, which is really good. 3 days, 650 pips, not bad. But I missed that opportunity, and then it was just kind of lingering at this price for a while. So I didn't really know what it was going to do, whether it was going to come back up, break out, come back down. So I just watched this stock, but I never really took any action because it hadn't decided itself what it was going to do. Another thing to notice is that the 180-day simple moving average looked like it's been pretty flat for the most part, but it started coming downwards, and as I've told you before, the 180-day simple moving average, which is the orange line, is to give you a kind of idea of where the general direction the price is going. So let me zoom out again. As you can see here, when the 180-day simple moving average was going up, the price for the most part was going up. Obviously, your ebb and flow will come down, come up, but to the general direction was upwards. Here it was downwards. Here now, so now here again it's starting to come down. So this was kind of telling me that it potentially could be a shorting opportunity, but I needed more information. As I always tell you, I have several different indicators I use, and I need to at least most of them to corroborate my views on which direction it's going to go before I enter a trade, because then it fills me with a bit more confidence if all these different indicators are kind of telling me the same thing. So the 180-day simple moving average is telling me to short, but that's not enough. So I look at the MACD. As you can see, the MACD here, the MACD had gone from positive to negative. Now this is a shorting sign as well. Obviously, this indicator by itself is not enough, but the MACD now is telling me to short as well. So that's another indicator that's useful. The RSI is telling me to short. It's coming down as well. So that's another selling signal. So can you see right now there's a combination of three signals telling me the same thing. The MACD, the RSI, the price action is looks like it was coming downwards. But well, the price action at this point wasn't really telling me anything because it was just all straight. But I was watching it. The 180-day simple moving average was coming downwards. So what did I do next? I'm on the daily chart right now. I went to the 4-hour chart, and I told myself, okay, if the price action breaks the 180-day simple moving average, comes back, consolidates, hits it, and then uses it as a support, as a resistance. So it breaks the breaks the 15-day exponential moving average, comes back, hits it, then carries on going down. Then I'll enter, and that's exactly what I did, because it really confirmed my position. So it broke it, and then I entered at 4165, which is $41.65. As you know, the pricing on my on Pro Real Time goes in the penny form, so it doesn't use decimal places. Well, it uses decimal places, but it's in the penny form. So that's $41.65. But I just use it 4165. I shorted it at 4165, and lo and behold, it carried on going down. One mistake I made, and I still think, well, even though we're in the 4-hour chart where it looks like it's oversold right now, and some people may think it's a buying position, I'm of the belief that it's going to go down some more, because on the daily chart, it looks like it's aggressively selling off. I feel like it's got a little bit more legs. I want to see the RSI on the daily chart go into go below 30 before I might sell it, because I think it will hit the support again, and that's where I've set my limit. My limit's just above the support line here. So even though the 4-hour chart looks like it might be oversold, I still think on the daily chart there's still more for it to go down. Now, in my eagerness, this is a mistake I made. In my eagerness, I set my entry at 4165, which is good, but I could have made an even better entry, and I'll show you why. Now, this is why I set up my dashboard in this way. Here is like I keep the 4-hour chart or the daily chart on the main screen. On the side screen, I try and keep a shorter time frame, so maybe like a 15 or 10-minute chart. The reason why I do that is that I want the perfect entry. I want to perfect my entry, so I want to optimize my profit by making sure my entry is at the highest point if I'm shorting, or at the lowest point if I'm buying to go long. So there was a clear-cut pattern being formed here, but I did not identify this until I'd already entered the trade. So I entered the trade on what day did I enter the trade on? Yeah, I entered the trade on, I think it was Thursday the 7th, right? So I entered the trade at 4165. In reality, no, I entered the trade on after market hours on Wednesday. So I set an order for 4165. When in reality, I should have set an order for about 4182. Now you're probably going to ask, how would I have known that it was going to spike up? This was anomaly. It could have spiked. It spiked up before it started coming down. It spiked up about 70 pips before it came down. So there's 70 pips I could have had extra. So this could have been 180 right now, something like that. So but you must be thinking, how would I know that it's going to spike up? Because I've done it before. as you can see here, a little bit of a pattern had formed where here it gone down here, it spiked up before, around this there, it spiked up before. So I could have made a kind of a bit of a calculated assumption that it might have spiked up. So I could have set my order here so that when the market opened at this time, it would have spiked up, and then I would have entered the trade, and it would have come back down, and when I at the 4165 point, I would have been about 60 pips up already. But it's a learning curve anyway. But I'll probably make another video all about entering at the optimal point. But this is just kind of a delving deep into my thought process as to why I think I could have entered at a better position, but still we're in a good position. So I am going to, I've already protected myself from making any losses, because I've set my stop loss, I've moved my stop loss to 40 pounds. So if the price decides to retrace tomorrow and come back up, I will still be in £40 profit. But hopefully, as next week comes on, the price will carry on falling. But this is just to protect myself. So now I'm in green territory. Regardless of what happens to this trade, I've made a profit. Anyway, I spent a lot of time on this one, but this is just one of the trades I've made this week, last week now, if you're watching this video. But what I want to really delve into is that there's a lot of the stocks on my watch list have, I like to trade a lot of times stocks that are less than, I don't really like to trade really expensive stocks. I like to trade stocks that are quite cheap in price. But I like to still look at indices just to see where the market is going. And right now, I'm seeing a lot of a huge sell-off occurring. If you look at the DAX, this red line has been pivotal. I've been watching this for a while, the DAX, and I created this red line because I thought that if it hit it, it would either break out up or it would sell off. What it did was that there was a false breakout here, but I didn't trade it anyway. But then it's been selling off aggressively. Now, this has been happening for quite a lot of stocks. The Dow Jones sold off, not as aggressively, but it's sold off a little bit. What other one? FTSE sold off, not as aggressively as the DAX. And same with the S&P. But why am I telling you this? Because a lot of these stocks, a lot of the lower cap stocks that I've got on my watch list have been exhibiting a lot of the same behavior. I'll show you. Not RTIs. ESV. This one is one I've been earmarking because I think ESV to me, it looks like it's exhibiting the same behavior as CBM, which was the one I just traded. It hit a bottom, it bottomed out here, came back up, it bottomed out here, it bottomed out around 312, came back up, has been just consolidating for a while, just been bouncing, kind of creating like a horizontal channel here. And from what I'm seeing, it looks like it's gonna have an aggressive sell-off soon, all for the same reasons as CBM. The 180-day simple move average is coming down. The MACD and the MACD looks like it's going to go into negative territory. The RSI looks like it's about to come down. So I'm watching this one because it looks like it's going to do exactly the same thing as CBM. What I'm waiting for it now is the same thing I was waiting for CBM. I want it to, it's already breaking the 15-day simple move average, but I want it to start aggressively selling off. So I want it to come down and then come back up a little bit, and then I'll probably enter that trade as well. So it's all about recognizing patterns. After you see one thing after you see something happen one time, you can see it happen again in other stocks, and you identify it the next time. Same with WTI. WTI, the exact same thing happened. It's even more interesting with this one because with WTI, there's a lot of, I've tried a lot of things in here, so it looks a bit messy. But with WTI, I set the Fibonacci. I always get extension and retracement confused. What's this one? Fibonacci extension. That's it. I set the Fibonacci extension from here to here, and straight away it peaked out at the 50%, and then it starts aggressively selling off. So this stock did exactly what CBM did, but also the sell-off was also corroborated with the fact that it peaked at the 50% Fibonacci extension level. I'll make another video about Fibonacci, but what I'm trying to really drive at here is that I use lots of different indicators to all kind of tell me the same thing. So if they're all saying the same thing, then I'm more confident in my trade. I can execute the trade a bit more confidently. As you can see here, 180-day simple moving average dropping. Price falling in general. Price action peaked here, and then it broke the 180-day simple, the 15-day simple moving average, came back, consolidated, and started coming back down. So if I was to enter this trade, I would have kind of waited for it to get here, and I would have entered here. So I'm showing you these three stocks because they're all experienced, kind of displaying the same type of behavior, but they're at different levels of the cycle. So these will be great stocks to kind of follow for people that are new or people that want to see kind of why I'm trading CBM, because WTI is pretty much halfway there, and it looks like it might come back all the way down to this support. ESV still seems like it's at the early stages, just before it breaks down. So I can wait for it to break down maybe to this line here, then come back up. And CBM, which I'm currently in, has already broken out, and all I'm waiting for is to make its way all the way down to the support. So those are the three stocks I'm following this week. Any one of them could really be a pick of the week. You could decide which one could be your pick of the week. So I'll leave that for you guys to decide which one you think is the best one to trade. I'd say watch ESV because it hasn't completely. It's at the earliest stage of this cycle right now. Comment in the section below as to which of the three you think would be great to trade, and your thoughts as to my analysis of these stocks. Not Trader out.